Hi everyone, so I just wanted to do a quick video to show you why I'm buying Store Capital. So this is a real estate investment trust or REIT on eToro that has been significantly undervalued. So from what it's actually trading for is way under what it actually is worth, which I'll go over shortly in this video. So to start with, we can see a PE ratio of 22.06. So comparing this to some similar companies such as Essex Properties, 23, which is quite good, which is worth buying, which I'll do a video on shortly, and Realty Income Corp, which is the larger of the companies, with a PE ratio of 42. So we can see already that we're going to a good start. So the stock is currently valued quite low. If we go down to the quarterly to the income statement here, we can see that their revenue's been growing year on year. So graphically, if you come over to here to the revenues, you can see 376, 453, 543, and 665. So one website I like to use is the macrotrends.net. So on this we can see all the different statistics on how the company is doing, which pulls it straight from the company's annual reports. So we can see here the gross profit of the company's Store Capital. So starting off in 2015, they had 212 million and are currently at 674 million. We can also see the year-on-year growth. So what's really interesting is even despite coronavirus, they've still got a 0.62% growth this last quarter. If we go to the EPS, we can see that the earnings per share is continually growing, and we can also see that their revenue from how much they take in every year is continuously growing as well. So that's seen a 2.44% increase. So if we go to another website I like to use for analysis, Seeking Alpha, I've got a portfolio here of 5 different companies that I own. So they're all real estate investment trusts. So if we go over to the debt tab and see how much debt they have per sort of amount of equity, we can see that they're in the middle of the park. So they've got 88.92. So they're not as high as Boston, which is BXP, or Essex Properties at 100%. However, Realty Income Corp is the lowest at 77. However, to know that for every $1 they own, they have roughly 89 cents in debt in a REIT is not too bad, because likely that they have mortgages on some of their properties. So by having tenants in their properties, we can expect them to be able to continually pay their debts, which is something to look at. We can see here in the growth, so the net income over 3 years has grown nearly 20%. If we go to their dividends, the company started in 2012. However, we can see that they are continuously growing their dividend. So on this tab here, started at 0.1139 and it's up to 0.35, and that's one of the highest even given the coronavirus, which is a very good sign. So if we go to the Store Capital Investment Relations available on eToro, which sends a direct link to Store Capital, and we go to the corporate profile and the investor fact sheet and open this up, we can see here that they pay 90% of their taxable income to dividends, which is a very good sign. So how it works is they avoid tax by paying more to the holders' dividends. So if we go to the page here, we can see that they pay a 5.52% dividend yield, which is very high, almost double or over double what you'd expect without coronavirus from a high interest savings account. So if we also go to their asset classes, so this is sort of real estate that they own. So 65% to service, so restaurants, health clubs, etc. Retail, so furniture, recreational vehicles, hunting, and used cars dealers. So all of these here are going to be at their peak of what they've seen in terms of from March to July, they've seen the worst of coronavirus, so people not coming in, and they've still managed to have a 99.5% occupancy rate as of June 30th, with an average remaining lease of 14 years. So they've essentially got an average amount of tenancies for 14 years, ensuring a long period of revenue coming in from the rentals. And their top 10 customers make up only 17% of their portfolio, which is quite good in the sense that then they have a large diversification around a lot of people, rather than if it's just one company that owns, say, 80%. If that company's go bankrupt, they're going to lose a lot of their occupancy. So similar to the last video I did on RTX or Raytheon, I've calculated their intrinsic value. So here we have the 5 different companies on the Seeking Alpha page here. So Realty Income Corp, Essex Properties, LTC, Boston, and Store. So their current valuation of this from this video, and their calculated intrinsic value based from their earnings. So their average growth in earnings, their earnings per share, and take into account the treasury note as an offset. So here we can see the margin of safety. So this is just simply how much they are trading currently under my calculated intrinsic value. So we've got Realty Income Corp at 32% lower than it should be, ESS at 44, LTC at 63, Boston at 69, and Store at 73.35%. So that's just trading way under what it is meant to. So I'll just show you the different parameters I use in this calculation. So we take the earnings per share here, which has grown. We can see here EPS that's grown average 14% a year. Operating income, which has averaged at 34% a year. Revenue at 33%, and the book value has only grown 6% a year. So this is very reassuring. We're looking at, this is a company that's trading way under what its potential is. And the 10-year government bond percentage is 1.56. So just overall, I think Store Capital is definitely worth buying. I've recently held some more positions, even though we've seen the rebound. So it was down at 14.5 and it's now at 25. I'd still consider this a very good buy. This is similar levels to back in 2017. And I believe real estate, this is essentially like owning a large portfolio of real estate yourself. So if we do one final look into the research here, which just sort of backs up the point of, is this a good buy? We can see that this class is a moderate buy, but I believe it should be a strong buy. It's had a large increase by hedge funds by 4.2 million shares in the last quarter. It's owned by Warren Buffett, so this gives a real insight into their. If you've seen Warren Buffett's videos, he really does care about how the management is when they're running a company. So I feel like with him behind him, owning nearly $500 million, it's a positive sign. And we've also seen corporate insiders buy 29.7k shares in the last 3 months, which for me shows that they believe if they're willing to invest their own money into their company, that's a good sign. So if you like this video, please let me know if you want to see any others. Any other companies you want me to analyse, just let me know. Cheers.